Listen, stop letting them manipulate you with these mortgage rate decreases and telling you that just because the mortgage rate is at a yearly low, that it's the best time to buy a home. This is what you got to understand. The mortgage rates are cool, but it's all about how you buy the home that can position you to do it your way while everyone else is out there waiting. And I teach people how to do that. So that way you know how to buy a home and you're not worried about the manipulation that goes on with the numbers and the tweaks that they make. If they wanted the mortgage rates to be low, they can make it low. Yes, it has a trickle down effect, but I want you to be in the know of how to go about buying a home despite the mortgage rate. So let's go into these mortgage rates. And if you want to know the blueprint on how to buy your home off market in a way that positions you to have equity in your home, regardless of the mortgage rate, interest rate cuts, and things of that nature, you can position yourself to get way less in amount that you pay on a monthly basis and overall mortgage just by understanding the right way to buy, just like we did. And now we have people near us that pay double or triple what we pay for our home because we bought it the right way. If you want access to that, comment there below and I'll make it available to you. So what the Fed's decision means for mortgage rates, we got to know these details just so we can understand what's going on and notice the manipulation when it's taking place as well. So it says the Federal Reserve cut its key interest rate for the second time this year on Wednesday in a move that experts say could lead to lower mortgage rates before the end of the year. However, much depends on what happens with the U.S. economy in the coming months. The initial reaction in bonds is muted and mortgage rates are steady. Melissa said basically she's a veteran in the game and she said mortgage rates could keep falling. So they're trying to paint the picture that they could keep falling because they know if they get mortgage rates down, more people are going to be heightened to buy. But we're in a day and age where some people don't want to buy a home altogether. They prefer to rent. Some people, want to buy a home. They just don't want to buy it at the prices that the homes as they're listed, because some people still have their homes overpriced. But some people just don't know that there's a better way to buy, and that's why I come in at. So what do we need to know about the Fed's decision? Well, it says that the U.S. Central Bank cut interest rates by a quarter of a percentage point to a range of 3.75% to 4% on Wednesday, as was widely expected. It did so with less information about the state of the U.S. economy than usual, as key reports have been delayed by the ongoing federal government shutdown. So it's a lot of things going on, a lot of uncertainty, a lot of fear going on. People are not just interested in buying homes like that anyway. However, many people know the importance of not renting, having some equity, having some ownership, something that you can leverage. And some people tell you don't buy a home, just keep renting. I'm of the belief that buying a home is a strategic play. You just want to do it the right way and position yourself to where you can have something that you own and you can have something that has equity in it, because that equity is something that you can tap into and you can leverage for future purchases, whether it be for a home, whether it be for some investments. It's just all about knowing how to do it. And then the key is the fact that you are able to live in an establishment but also have some type of ownership to it. And also, as you pay it down, you're creating some type of equity. That is a tangible asset that makes home buying make sense. The problem lies when people buy their homes and they overpay for the home, as many people did around 2020, 2021, and people were selling their homes like hotcakes. The market was crazy. People had bidding wars going on to where people paid $400,000 on a home that shouldn't have cost more than $298,000. And now what happens is the market changes, the demand goes down, and now they realize that they overpay for the home. So now they're stuck with a mortgage on a home of $400,000, and the home isn't worth $300,000. You see the point? So don't fall into that trap and this manipulation and the things that go on, because that's what does you a disservice. It's about you knowing and being able to have a different perspective, a different angle, and doing what everybody else is not doing. And this even means you're not going to be going directly through somebody who's marketing a home and trying to get the top price for it, which could be a realtor. It's going to be you navigating the situation. And I teach you how. For those who want access to it, just comment down below and I'll make that happen. But this is what they said. They said they're going to collect every scrap of data that they can find, evaluate it, and think carefully about it. And that's their job. As the Federal Chair Jerome Powell told reporters during the news conference on Wednesday, the government shutdown, which began on October 1st, is now stretching into its second month, right around the corner. So this lack of information, together with the uncertainty surrounding the future of the U.S. economy, has cast doubt over whether the Fed will cut rates one more time before the end of the year. So they're debating on cutting rates even more. But again, You got to see how they're playing the game. He's saying he didn't know the condition of the, the market and the government, and they may consider cutting it again. That means if they can cut it again this year, and they weren't planning on doing it again this year, they could have been cut it. So that's why you got to understand that it's all manipulation. You just have to know the right information so you can dictate or determine your situation. So that said, the next Fed meeting is 6 weeks. And it says, so we don't know what we're going to get, Powell said on Wednesday. So what is happening with the mortgage rates now? For much of the year, the average 30-year fixed rate mortgage, the most popular form of home loan among Americans, has lingered between 6.5 and 7%, hovering near the peaks reached after the Fed began its aggressive rate hiking campaign in 2022. So I told you, around 2021, a lot of people was buying homes. 2020, a lot of people was buying homes because more people was wanting to be in the home, and they wanted to enjoy the home that they love. A lot of people were doing upgrades, remodels, things of that nature. We were doing some remodels and upgrades as well during that time. But the rates ended up peaking and going up higher the following year in 2022. Then it says in late August and early September, the rate began to fall in anticipation of a widely expected decision by the Fed to cut its key interest rate for the first time since December 2024. So they had the high rates. It slowed down the market. Purchases have been going down. Not a lot of home buying has been going on. How do I know? I was a realtor and saw a lot of things happening in the market, and not a lot of people wanting to buy homes after the big rush of people buying homes during the prior years. And then it said as of the week of ending October 23rd, the average 30-year fixed rate mortgage stood at 6.9%, down 0.35 percent points from a year earlier, much below the mortgage average of 6.28%, according to Freddie Mac. But still, again, a game of manipulation. They just kind of yo-yo the interest rates here and there. It's at 6% here, it's at 5% here, and all of these basis points. Forget all of that. I want you to understand that, yes, the interest rate plays a part. I'm not saying that. You having a good credit score plays a part, yes, because it allows you to qualify for the best rates possible. But you buying your home the right way can be the very thing that shaves off 50,000, 80,000, 100,000 plus off of your home, and that's way better than any lowering of their interest rate, because you got a lower amount on the bottom line, and then you actually position yourself to buy a home below equity. Below the value, so to speak, to the point where you bought it with equity. That's the key. That's the key. That's why I don't want you to be manipulated by the interest rates when you can control your entry rate. I want y'all to write that down. Stop being moved and manipulated by the interest rate when you can control your entry rate. Your entry rate is how much you go into the house, or how much you put when going into the house. How much is it going to cost you on paper to purchase this home? That's what you want to control. They can control the interest rate all day, but I want you to be in position to control the entry rate. Let's wrap it up. How is the Fed's latest decision likely to affect mortgage rates? So it says, Wacom believed that mortgage rates could continue falling by the end of the year, an expectation she shared with mortgage giants Fannie and Freddie Mac. Other experts were more skeptical. They warned the further declines in mortgage rates may be harder to come by, and they said the upcoming cut is already priced in, while uncertainty over potential December moves, stubborn budget deficits, lingering inflation, expectations continue to limit how far mortgage rates could fall. Again, they battling on if it could fall lower, if it can fall. You can drop it to 0% for all I care, and it's still not a good deal just to buy a home on market. Even if it was at a 0% interest rate, yeah, that's good. But if you buy a home overpriced, because what would happen if the interest rate get lower, people will start trying to heighten their prices up a little bit to see if they can get a little bit more. And then people will get manipulated into, but the interest rate is 0%. So it's like, you're getting free loan, so to speak. Well, if they didn't overprice or mark the home up $75,000, $100,000, no, you just shifted the money and where it went. So, look, interest rates matter when it comes to you investing, you getting a return on your investments, or you becoming the lender, not the borrower. But when it comes to these homes, they play around with these prices, and you have to be the person who understands that you can control the amount you pay overall, position yourself to buy your home with some equity, and not be manipulated by when they say the best time to buy based on certain interest rates. And once you understand that, you change the game, and now you go into the home buying process totally different. And when you get into your home, you buy it with equity, you buy it with some ownership built into it, and you buy it on your terms, not theirs.